Will the September slump shatter Bitcoin's bullish trend? That is a question burning on everybody's mind. We're going to try and climb into that here today, guys. Hey, it's Keith Allen, and I got to tell you, despite my best efforts of trying to always give you guys an unbiased perspective of the market, I always try and show you guys, potential moves in both directions. I got called out by a buddy the other day who, says that my analysis always leans bullish. So today I'm going to mix it up a little bit, try and show you some different things, some different looks, because let's face it, we have this legend of the September slump, that September is always a bad month for trading, and the media platforms are absolutely polluted with that. We're going to take a look at that. Of course, we're also going to look at the charts, which Bitcoin charts absolutely look like garbage right now. But does this mean that it's the end, or that we're moving towards the end? Does it mean that this is going to necessarily break the trend? So what we're going to do in this analysis, we're going to look at order book and order flow data and fire charts like we always do. We're going to look at technical analysis like we always do, and some of the other factors influencing Bitcoin price. But I really want to hone in on at least what my invalidations are for this market, why I have held my sentiment that the macro bullish trend is still intact, and what it's going to take to break that. So let's start here on the Bitcoin daily chart. Why not? So we can just get a quick overview of what looks good and what looks bad. And this is going to be really easy because not a whole lot looks good at this point, in my opinion. But hey, you've got to give these things time to develop. So here we are. We've talked about the depth crosses. We've had a bunch of them here in the past few weeks. Certainly not a strong look for Bitcoin or any asset that is going through this, right? It's a lagging indicator. It's showing a continuation of a downtrend. We did somewhere along the way get this massive wick down to 49.5. Depending on the exchange you're on, it might even be a little bit lower. Whatever the case may be, this is currently serving as our local bottom. And it also looks like we may be on our way to testing that as a local bottom, because here we are, we're making higher lows out of this, and well, we've now gone back to making a lower. So that's definitely not a strong look for Bitcoin at the moment. Now I want to talk about this legend of September because markets tend to overreact to this kind of stuff, and they also tend to exaggerate a bit. Yes, September has not been great for Bitcoin in recent history. However, we've had 14 September since inception, because Bitcoin was first Genesis block, back in 2009, October 2009. So we had no September that year, I should say. And then moving into the years, over the decade plus, we have seen a series of red Septembers along with several green Septembers, namely the first one in September 2012, which was a 22% green candle on the monthly. Again in September 2013, relatively flat, but closing slightly green. Then moving forward to 2015, relatively flat, but positive, over 2% to the upside. Continuing on, 2016, 6% green candle. 2017, 65% green candle. So then we, of course, went through a period of red Septembers, starting with, we moved into a bear market, had a couple of rough years, several rough years, in fact. And then most recently in September of 2023, we had another green candle, 4% to the upside. So I would say that the myth of, or the legend, if you will, of September's always bad, the word always and never just does not age well in this game. And so I'm going to say it's not an always, right? we're certainly at the moment on pace for a red September. Not saying it's not going to happen, because it certainly looks like it is. But it's not how you start; it's how you finish, right? So, how is this going to recover? Um, as we talked about yesterday, and a few other times, when we looked at these death crosses, and now this golden cross that we have here, between the 100 and 200. These often resolve themselves by finding bottoms. Whether that is a local bottom or leads to a bear market remains to be seen. A local bottom, a double bounce here from this wick that we had on August 5th would be poetic, but that's not necessarily going to hold. And if it doesn't, I then look to this trend line, which really began way back on the FTX crash. We obviously rallied out of this. This was largely believed, especially myself included, to be a series of bear market rallies. We then had a consolidation down here in this 25 to 30K range, and this is where the breakouts began. You can see as price moved above the key moving averages, and they began to unwind. So this is largely where things took off from. So again, this remains intact, and this remains intact. For me, this would be a breaking point. Maybe depending on when this happens, right? As these moving averages move up, the 200-week moving average and the 21-week moving average are definitely ones that I pay very close attention to, as well as on the daily. I like those two moving averages. And this, speaking to the bearish case, a rejection yesterday from the 21-day moving average, also not looking good. MACD, not looking good. Trend precognition, A1 slope line, rolling over, and looks like it's headed towards a potential red signal on the daily. Let's see what it looks like. Let's actually put trend precognition up on this and see what it looks like in terms of I don't have it on this chart. Let's put it on this chart or this chart. Here you go. Here's a good one. Let's put it on this chart, and we can see that we have on the monthly, things seem to be actually the momentum, the bearish momentum is fading a little bit as we see the A1 slope line ticking up a little bit on the monthly close. Doesn't mean that we're moving into positive territory, just means that believe it or not, bears aren't as strong as they may appear to be. But we have this very strong signal here, back-to-back signals on the weekly chart, obviously pointing downward. I would look for support here at the 50-week moving average, which has been pretty strong through the history of Bitcoin as a bounce point. But again, that's sub 55K. And if we look at liquidity in the order book, there's not really much down there. We do have some bid support here at 55K, but the strength is at the 50K level, and even that's not super stacked. So let's see if I might need to refresh this. I've had it open for a while. So we want to look and see where liquidity is moving and how order flow is flowing. And so I had just noticed on that chart a second ago that it looked like a block at this 45K range had moved a little bit. I want to see if we can tell if it has moved up or down or just disappeared. And it's not real visible at the moment. So this is a recent move. Might need some time to populate here. Oh, here we go. So it actually looks like some of it has moved up into the 47.5 to 51.5K range, which is interesting. To me, that means less sentiment for that level. That level has been interesting to me for a lot of reasons. And one of those reasons is because of the fact that it has been a prior consolidation range. I have all this halving stuff up here because I wanted to show you something on that chart as well. Let me see if I have a better representation of those consolidation ranges without all that noise in it. I don't, not open, I don't think, but let's do this. Let's just get this guy out of the way. And so we can see that we had consolidation ranges here, 25 to 30K range, 40 to 45K range, briefly in the 50 to 52K range, et cetera. So this is the only one that has been retested. This has been a target I've been looking at for a long time, and it still has some level of confluence with the trend line. So I see this as a great target, a great potential target for a bounce. What I don't see is much below that if this breaks. And for me, if this trend line breaks and doesn't recover very quickly, then then I would have a hard time arguing that the trend is still alive. Right? It breaks the trend, and then it sends us down. Our next level of support is really down here in this 25 to 30K consolidation range. It would be an epic place to buy, no doubt about it. We're back to generational wealth if we can get there. Um, at the moment, though, I just don't know if there's sentiment for that to happen. Now, because I don't want to lean too bullish, let me say this. Uh, much of my sentiment is based on the fact that we're in this, post-halving cycle. Things are a bit different this time around for many reasons, including the fact that we reached an all-time high just before the halving, um, which actually wouldn't even make this a mid-cycle top because it happened before the cycle. Uh, what I'm looking for is this to ultimately resolve its way to the upside because we've had a really hard time breaking this 69K level since we wicked up above it. And as you can see, we've battled with that level time and time again. It has not been strong. Lower high, lower high, lower high, lower low, lower low, lower low. All of those things are most certainly bearish. Losing these key moving averages certainly bearish. A bounce, on the other hand, from this potential double bottom would be um, a sign of strength. A bounce from this 45K level, from the trend line, would also be epic, in my opinion. And that is largely because if we look at the history of that trend line, it has led to major moves. So I see this as good foundational support. Uh, how much strength is there at this point? Well, we just saw on fire charts that some of the bid liquidity in that area has left and moved up to this area. So we'll have to see how that develops as we move forward. Lots of catalysts can really break things down, especially the unemployment number, which is coming on Friday. And I would say that a hot number is not going to be well received and could very likely, we have that number coming up when? On Friday morning, non-farm payrolls and unemployment coming out Friday morning at 8:30 a.m. Eastern time here in the U.S. That is certainly a catalyst that could smash through this trend line and and send us into really down to paradise. And at this point, if we lose this, I would think a grind down, maybe an initial dump, a little bit of a recovery, but a grind down further until we get to this prior consolidation range. So trying to show you both sides of what I think is possible to give you a full picture of why my bias remains what it is. Number one, it's because the trend line remains in place intact, and number two, I have a level here on the RSI that I've watched very, very closely for many, many years, and that down here has also not been broken here on the weekly. We have approached it a couple times, and a move, a sub 50K move, could break it. So that's something I'm watching very, very closely. If you look at history, if you look at the history of the Bitcoin chart, as long as the weekly RSI has stayed above this 42 level on the weekly, the bullish trends have remained intact. And anytime it goes below that level, I'm even gonna let me clear out these RSIs. I mean these moving averages and clean this up. There's a lot going on in this chart. Anytime we see this happen, as you can see, when price breaks below, we get into bear market territory. When price breaks up, the uptrend is intact. Below, big dips, big corrections. We've had some retests, and look at this. Look at this was the 2021 top. Ultimately, this became the mid-cycle top. We tested it, bounced right from that level, and then went to a new all-time high. The breakdown was a grind, and as you can see, we fought back a bit, but failed to really hold that. So at that point, you look for those retests against those moving averages to see if things are going to sustainably break back up, or if those rejections tend to lead to more downside as it has. So again, I'm watching this very closely. We saw this break in January at the beginning of the year. That was an indication that we were headed into a bullish trend. We have tested it, or come close to testing it, I should say, a couple of times here. But as you can see, look at this right here, and look at this right here to the trend line. So that's exactly what I'll be looking for to determine, for myself, anyways, of whether I think this is going to hold, or whether we're breaking down and moving into bear market territory. That's my summary of it. Looks like we got some comments in here. Let's see. Any longer term trend, Bitcoin is bullish. As an investment, buy and hold is a different matter. Yeah, my man, XBT, saying that, yeah, over any longer term trend, Bitcoin is bullish. So as an investment, buy and hodl. Trading is a different matter. Love you, man. Love you too. Absolutely. So this is a great point, and many people confuse the fact of whether you are trading or investing. And if you are a long-term investor, if you are of the belief that price will be at some point in time higher than our current all-time high, then dollar cost averaging your way into that position should be fruitful. If you are trading and worried about watching your portfolio draw down, as mine is doing now, then you obviously have a different perspective on things. Now, I've tried quite a bit here for the past several months to improve my cost basis, improve my average price by selling a little bit of my stack and buying back in. And I will tell you that on most of those attempts, I failed to buy back in as low as I had hoped to. So I've at least for the moment stopped doing that. Now, if I get another pump, I may cycle some out and take another crack at it. But I will tell you that at the moment, things look bearish in the short to mid term. We'll have to see how things resolve. And of course, Fed, we have a rate cut coming, or at least projected here by late September, which could change the dynamic of things. And I think that the data that we see, especially the unemployment data that we see this week, may influence that. Let's see. Hey, thanks for the comment, XBT. Appreciate it. Regarding the Fed, do you think good news are good for price again, or still bad? I'm notoriously horrible for figuring out how the market is going to react to economic news. But I really think that at this stage we're at a good news equals good news phase, because um, we don't want to see a spike in unemployment. We know it's already ticked up 0.2%, and we know that historically, once that happens, it tends to trend upward. Obviously, the Fed is trying to thread a very tight needle here, and we will have to wait and see how effective they are at doing that. If we see a spike in unemployment this week, then I expect potentially a higher rate cut, maybe a 50 basis point cut versus a quarter point, and that may, how should I say, fuel sentiment that the market is headed for a harder landing and a deeper recession. Those things are not good. What, Anthony? Do I use cycle theory in your trading thesis? BTCC typically has 60-day cycles, and we're right in the window for a cycle low. I don't really study that or watch that too closely, Anthony. That's a good question. I am, however, looking at the halving cycle, and oh, that was something I wanted to show you guys. Historically, it takes quite a bit. Now, if we are to break this trend line and go into the bear, then that really kind of shatters the thesis, the narrative around the halving cycle, right? We have seen big corrections post halving, no doubt about that, and we have obviously seen a degradation and the upside potential after each halving. It seems like we're somewhere in the conservatively 20 to 30% range. Each time. So, the first halving went 10,000%. The second halving went about 27% of that. The third halving went about 24% ish on my rough math of that. And so now that would mean that this one is, if we said that this one were to go in the 20 to 30% range, then we would see potentially, let's see where we're at. This ballpark it right here. Gotta make an adjustment. And so that would be, somewhere. That was wishful thinking. What I say, somewhere around 130, 120%, 130% or so on this move, right? I'll be conservative. We'll lay it right there. Somewhere around 130, 120, 150K. But what's important to look at here is the duration, right? To reach these tops. And in the early days, it took exactly, where's my auto? In the early days, it took almost exactly a year. All right. This one took, from July to December, almost a year and a half. Same thing in this situation. We're at what? May to November. That's what, 18 months. So I'm looking for the same thing out of this, right? Which could carry us obviously well into next year. So does that lend itself to a potential test of support either here at this double bottom or better yet, in my opinion, at the trend line? Yes, it does. A breakdown, we know where that goes. We already talked about that. So that's what I'm watching for. Simple as that. Invest me house. I just answered. Oh, great. Glad to know. Let's see what else Anthony has to say. Here, most recently, granted, my chart has tons of marked days, but 5175 to now maybe 9456, etc. The time frames have tolerance of plus or minus 6 days. All right. Well, we will. Thanks for the tip. That's something we can all watch closely on our own. And what else? Invest Me Out agrees. Rotated back to good equals good 5 weeks ago. Yeah, I hope I'm right on that. Again, I think a hot number is not going to be well received. I honestly think a flat number would be good, or maybe even a slightly better number. My concern is if we have like a significantly better number, people already scrutinize the data. Like, are we getting fed accurate data from the government? That's a completely different show. But I think that if it drops too low, then people are really going to question the data. And at that point, and even without that point, I think we have to look at the surrounding data around it. From non-farm payrolls to government payrolls to participation rate, et cetera, to really build a complete picture around that. So that's my view of what we're looking at the moment. Yes, September is currently ugly, and I'm not currently seeing a whole lot of strength here in the chart, with the exception of, we did see a bit of a move on some liquidity. And at the moment, it looks like purple whales might be buying a bit. Uh, and they are. We're seeing a little bit of a pump here, and we're seeing a bit of a roof pull here at 59. Let's see. Obviously resistance overhead here. Um, and in terms of liquidations, we've not seen what I expected. So, the longer we go, uh, some of those shorts close. And I was really expecting a short squeeze up to this 65K range, and it hasn't materialized. We did liquidate the downside that was there. That came true. But now we have new shorts stacking here in this 57 to 59 range, which I think is risky. And of course, we have these long-standing, well, semi-long-standing shorts up to about 65. But I'll be honest with you, quite a few of these had closed over the weekend through yesterday. So those are things to be in tune to as well. So with that, guys, I'm going to wrap it right here. If I see anything popping up through the day that looks interesting or exciting, I will certainly do my best to chime in and show you what's developing. At the moment on the intraday, we can see that purple whales have been buying since we hit about 56 and change. So that's starting to roll off the top right now. Support at 55K is getting reinforced ever so slightly. This is not enough, in my opinion, to really, really pump things. We need to see more. We need to see more of this liquidity stepping up higher, and I think that's going to be key. Even for some rallies within this, I do expect that we're going to see some more of this ranging between now and Friday's unemployment report. And with that, I'm going to wrap it right there, guys. Hope you have hope I've gave you some things to marinate on. If you like the streams, do me a favor, smash all the buttons, and please, most definitely share this stream so that we can grow the channel. And if you have a comment, go ahead and leave it. I look forward to reading those, and I engage with each and every one of them. Have a fantastic day and trade safe, my friends.